Hey everybody, hope everyone's doing well and had a good day. This is the Emini review for Friday, June 14th, 2024. And because it was Friday, we'll go ahead and look at the weekly chart first. So obviously tight bull channel, and then we had a trend line break, but it was a minor reversal. We're getting continuation, and the bulls managed to get consecutive bull bars closing above their midpoints, and then a breakout bar closing above all the bars to the left. So the bears haven't done enough here. This was a minor reversal, a low one with a weak signal bar and a weak entry bar. Now the bears, they're looking for another sell setup. Maybe a low two. If next week is an inside bar, maybe we break out, pull back, close on the low. But for now, there's nothing to sell, and the market could go higher. And then on the daily chart, the market was sideways here for enough bars that traders might argue we were in a bull channel. We got a bull breakout of the bull channel, so low probability event. The market should reverse within 5 bars or so and test the trend line. And what's the trend line? This could be the trend line. The trend line could be from down here all the way down here. But you can see the market got squeezed. We got the bull breakout. The follow through was weak. We had a couple dojis, but it wasn't enough. The bears did not do enough for the bulls to panic, and we ended up getting a high one buy signal bar on today's bar. But coming into the day, we had a couple dojis with the bull breakout. Thought the odds were there were buyers below yesterday's low. Just look at the bar. It's a weak sell signal bar. A couple of dojis, tight trading range. The odds are there are buyers below. And you know that we rallied into the close of yesterday. So if we retest the lows, there's probably buyers below. So let me just draw yesterday's low, and we'll get into it. I believe that was yesterday's low. Yeah. So coming into the day, we had a gap down, and bar 1 was a bull bar. It's a bull reversal bar closing on its high. It's a strong bar for the bulls, but after the gap down, the gap down will probably get a second leg down. And most days break out of the prior day's high or low. So if you just look at where we are right now, we're obviously closer to the low than the high. Here's the high and here's the low. So the low of yesterday is a magnet. The market may want to test there. We had a big enough gap down. You have trapped bulls above. They'll use any bounce to exit. They're losing long positions. You have bears who didn't sell up here. We have a bear surprise. Probably will get a second leg with bulls and bears selling a pullback. So that's the problem with buying above bar 1. Plus, bar 1 remaining the low of the day. There's about a 20% chance of that happening in general. And then follow through buying on bar 2. So consecutive bull bars closing on their highs. It might be always in long. We also had a tick gap from the close of bar 1 to the open of bar 2. So consecutive bull bars, both closing on their highs. But the market's in a trading range. Just look to the left. Big up, big down, big up, big down, everywhere. And now we're in the middle of the range. And when the market's in a trading range, if it's always in long, it's time to sell. We may go a little higher. It's enough momentum up. It'll probably get a second leg. But it could be minor because these bars, compared to the gap down, are smaller. Also keep in mind, whenever you're in a trading range and you have something bullish, the institutions sell. When you have something bearish, they buy. So then disappointment for the bulls on bar 3. We have a bear bar, tried to break out to the upside and failed. Closed below its midpoint, but again, after consecutive bull bars, the first reversal will probably fail and be minor. The bulls will likely get a second leg up, but that second leg could be really minor. It could be as small as 1 bar, or even the tail of 1 bar. Probably sellers above bar 3. And then look at bar 4. That's the type of second leg I'm referring to. The bulls should get a second leg after such a strong rally, but the context is bad. After the big gap down, you're in the middle of a trading range. So leg 1, pause or pullback. Technically not a pullback on this chart, but because it's a bear bar, it's an implied pullback. There was a pullback on a smaller time frame. And then leg 2 up to bar 4, and look what happened on bar 4. Bulls, maybe they bought the close of bar 2, disappointed with bar 3. So if you bought the close of bar 2 and you get bar 3, what are you going to do if the market retests the close of bar 2, your entry price? You're going to take it and get out of your trade. And that's what's happening on bar 4. Now bar 4, it's a 4-bar micro channel, but it's not very strong. You had 2 strong bars and then 2 weak bars for the bulls. And bar 4s are a sell reversal bar. Even though it's got a bull body, it closed below its midpoint. So we went down on 3, up on 4, down on 4. It's a micro double top. And as far as the gap down, maybe it was a 50% pullback of the gap. I guess I don't have the 50%. Just give me 1 second. There we go. So here's the 50%. You can see we're getting close to that magnet, and we're getting close, testing it, pulling back, getting close again, pulling back. We may get there, but the market, I still think we're going below the bar 1 low, and I still think yesterday's low is a magnet. And then bar 5 is a problem for the bulls. So if you see bar 5, technically it's a pullback, it's a high 1 buy setup, but it's a bear body, it's a weak buy signal bar. The bars are completely below the moving average, and you're in a trading range, so the context is pretty bad. The odds are there are sellers above bar 5. And then bar 6, it's a bull bar. If you bought above bar 5, bar 6 isn't the worst bar in the world, but you were really hoping for a bar like 56 yesterday, a big bull bar trapping bears selling above. And because it wasn't a big bull bar, you'll have bulls exiting. The problem with bar 6, think about it. Bar 5 is your stop order signal bar. It's a weak stop order signal bar. You need the entry bar to make up for it, and 6 was not strong enough to make up for it. 6 broke out above bar 5, but that's it. It's still within the range of the bars to the left, and it's a tight trading range, and we're high in the range, probably more sellers above. And then everybody sold on bar 7. Now, bar 7, 10 a.m. Eastern Time, it's a common time for a report. It's good to know that, but you don't need to know that for taking trades. You don't need that information. You don't need to analyze what the news was. Was it bullish? Was it bearish? The chart tells you everything you need to know. If you think about what I was just saying, we had a rally up to bar 2, disappointment in 3, bulls exited, weak buy setup, nobody bought, we're testing high in the trading range, and then everybody sold. It all makes sense. You don't need to know what the news was. So big bar 7, it's a little bit of a surprise bar. And you can see we traded below the bar 1 low, and we closed below it. Strong enough bar, probably going at least a little lower, and it will probably get a second leg. But because of the context, you are expecting big bars to, well, in general, big bars like bar 7 are followed by 1 to 3 bars of sideways price action. One of the reasons for that is you have bears who sold above, maybe bears sold a close of 6, and they are taking profits on the big bar. A big bar can be seen as a gift. If you sold the close of 6, your initial risk was small, your actual risk was hardly anything. And if you get such a big bar, you're going to take that profit. Plus you have bulls buying below bar 1, betting it's a trading range. Strong enough rally, bars 1 and 2, there were probably buyers below. But some of those bulls probably pulled their limit orders when they saw the momentum of bar 7 going down. And then you have the low of yesterday magnet, so I still think we're going there. And then what about always in? Well, it's definitely a trading range. Big up, big down. Look at yesterday's range, yesterday's price action. It's sideways. So maybe it's always in short, but the bears probably need one more bar. And even if they get it, the odds are there are buyers at yesterday's low. So better to buy low and sell high. So a follow-through bar on bar 8. You can see the big tail on bar 8 is bulls. Let me draw it again. If a bull bought below the low of bar 6, betting it was a weak sell signal bar, and they bought more below the low of bar 1. Sorry about how bad this looks, but we just care about the 50% right now. So this red line, you can see where the market tested. Basically tested the midpoint of the two entries. Bulls bought here, they got trapped, they scaled in lower, and then bar 8 allowed them to exit at their average price, and they did. So we turned back down. We have an open gap. So if a bull bought below bar 5, bar 6, there's a gap between the low of those bars and the high of bar 8. So we have an open gap. That's good for the bears. But it's still early in the day. Big up, big down, trading range. They still need to do more. But one open gap is good. But the problem right now, it seems pretty clear the market's in a trading range. And everybody knows gaps close in trading ranges. Trading ranges are forgiving. So if you bought below 6 and scaling lower, you're probably going to be able to get out at the low of bar 6 later. And then bar 8 isn't the best bar for the bears. It's a lot of overlap with bar 7. It pulled back fairly deeply, but it did close below the close and the low of the prior bar, so that's good for the bears. It's a bad stop order buy, so probably sellers above bar 8 if we go there, and probably going a little lower. Bar 9, we went a little lower. We had a bear breakout, but it's a weak bar. It's a trading range bar. The past 2 bars have been trading range bars. Small bodies and big tails. On some time frame, it might be 3 legs down. Down on 7, pull back. Down on 8, pull back. Down on 9. This might get a minor reaction, and we might bounce, but it's minor. This is a 4-bar bear micro channel, and it's all one breakout from bar 7 to 9. And so this could be seen as one leg. We get a pullback. We trade above bar 9. The odds are there are sellers above for a second leg down. Now, again, one of the problems with, let me back up. On the higher time frames, or even just in general, you think about the gap down. I've shown this before. I'll show it again. It's worth showing for visualizing. You can think of gaps as breakouts. It's also helpful to look at the Globex session and see what the market behavior actually was, why the market gapped. Was it just one big bar? Was it climactic? Was it a small pullback trend? But you can also just visualize it like this. It's one bar. So we had a big bear trend bar, minor reversal, couple legs sideways to up, and then a second leg down. So this could be 2 legs down in an overall trading range. So I think it's dangerous to be selling down here. But at the same time, I think bar 9 is a weak buy setup, so probably will not lead to a major reversal. But breakouts in trading ranges tend to get deep pullbacks and delayed second legs. And then you can see what happened. Everybody realized we're low in a trading range. Give me just one moment here. Unfortunately, I had something come up today, so I'm not doing today's video. That's why today's video is late, and I'm not doing it in my home office. And I might have to speed it up a little because I don't have my laptop charger, and I'm on low battery, so I just want to put that out there. But continuing, you can see what happened. Traders realized, okay, we're low in a trading range. This was strong enough for a second leg down, but what I just said, breakouts in trading ranges get deep pullbacks and breakout points close. Now we're racing up on bar 10, probably going at least a little higher. Probably sellers at the breakout points. Bar 5 low, bar 6 low, maybe even the bar 6 close if we get there. But I still think we'll get a second leg down and get below yesterday's low. Major bottoms usually have good buy signal bars. Just look at yesterday. Major trend reversal here, bar 37, a great bull bar. It's unlikely bar 9 will remain the swing point. Follow through buying on bar 11. So bull breakout and follow through. What's the problem with it? Doesn't Alice Hay? You get consecutive bull bars closing on their high. You buy the close, go for a measured move, 60%. The problem is context trumps everything. So think about it. We go up, we go down, we go up. What do you think is going to happen next? Probably going to go down. It's a trading range. You're testing breakout points. You had bulls buying below 5 and 6. They got trapped. What are they going to do in a retest? They're going to sell. You had bears who didn't sell. The bar 7 surprise. Strong enough for a second leg. We're pulling back deeply. Probably get a second leg. Bears selling. Bulls selling. That's what happens. That's what contributes to the second leg down. And then you can see any bull who was front running the breakout on bar 11, expecting it to go higher. They bought the close of 11. They immediately got trapped. And 12's a problem, and they may just bail out of the trade. If they're lucky, they'll get a second leg and test the bar 11 close, but that's if they're lucky. And then 13 going lower, probably going to a new low, because like I said, unlikely 9 remains the swing point, and I still think the odds are we'll test below yesterday's low, or at least test it. Consecutive bear bars, probably sellers above, but this was strong enough for a second leg as well, but we may be in the process of a deep pullback. So bull breakout, deep pullback, buyers below, then get a second leg. 3 consecutive bear bars, good for the bears, but now look where bar 14 is testing. We're testing the low of yesterday, which is expected to be support. Probably buyers below, plus you had this breakout. That was strong enough for a second leg, and strong enough for buyers below, and that's where we're testing. So it looks strong with these bars, but you know the market's in a trading range. You can also argue 3 pushes down, possible wedge bottom. You'll have some bulls either trading lower time frames or just simply buying the close of bar 14, taking a chance and betting that it's a wedge, 3 pushes down, double bottom with 37, and possible low of the day. 15, good bar for the bulls. That is credible for, let me back up. If we're thinking about always in and major swing points, 15 is a bar. Bears need to exit above. Bulls will buy above 15, looking for the opening swing. Follow through on 16. Not ideal, but also not bad. It's a low 1 short, consecutive bull bars. Bears trapped below, probably buyers below if we go there. And then more buying. Bears giving up, bulls eager to buy. We're crossing the moving average. It's a strong breakout. One problem, it might be 2 legs up, 1 pullback 2. But you can also argue it's leg 1 because we have the wedge. 1, 2, 3, completed price structure. Here's the new breakout, leg 1. And it's fairly strong. 2 really decent bull bars and crossing the moving average, closing above. But what have I been saying about breakouts all day? Breakout here, expect a deep pullback. Breakout here, deep pullback. Breakout here, deep pullback. Well, this pullback could be a major reversal. Wedge bottom, bottom of a trading range. Now, this breakout is no exception, though. We'll probably get a deep pullback. A little bit of disappointment, 18, but not enough for the bulls to panic out. Probably buy limit orders below bar 17. Outside bar 19 going more sideways, but the bulls will probably get a second leg. And the bears, maybe this gets a second leg, but the problem is it's 3 pushes down to support. Bear breakout 20, but below an outside bar. There's probably buyers below, scaling in lower. And then look at 21. Everybody bought on the close of 20. 20 is a minor reversal, strong breakout, minor reversal, everybody bought it. The bulls are looking for a second leg up, but there's been so much sideways price action today, it's unlikely we just rally here and go leg 1, pull back, leg 2. More disappointment for the bulls. The market's in a tight trading range. Probably more sellers above 22, but if I had to choose always in this scenario, I think it's always in long. It is in a trading range, but if you think about the big picture, wedge bottom, double bottom, probably going higher. The bears had 1, 2, 3 breakout attempts, and they all reversed. They tested yesterday's low, which was 73 and a quarter. They tested it to the tick on bar 14, and then we reversed strongly. So we might have a low of the day here. And then going higher, 23. Weak sell signal bar. Maybe it's a low too, 18 and 23, but buyers below because the selling pressure is not great. It's a weak signal bar as well. Inside bar 24 reduces the probability for breakouts. Probably sellers above and buyers below. But if you're selling for a scalp. 25 bull breakout, but pulled back immediately. Still a weak sell signal bar, and it's a micro channel since bar 20. So 5 bar micro channel, not the strongest micro channel in the world, actually 6 bars. But the problem for the bears, there's not enough selling pressure. It's probably buyers below, maybe buyers at the moving average. 26 bear breakout. Sorry, I have to keep an eye on my battery here. Bear breakout, but probably minor. Bulls will buy it and scale in lower. Maybe the bears, we get a test of the bar 20 close where bears got trapped, but even if we get there, there's probably buyers there, and support will probably bounce. So I think the downside is limited. 27, bear breakout, but possible vacuum test of support. Like I just mentioned, we're testing right here, and let's see the reaction. Follow through for the bears, which was a little surprising. We're closing below the swing point. The bears are hoping we get see if I can draw it. Bears hoping for a double top and a measured move down. Where's the double top? Maybe 19, 24, or 26. We'll be more conservative for now. Here's the breakout of the neckline, measured move down. That's what the bears are hoping for. But the reality is it's a trading range and possible expanding triangle bull flag. Maybe 3 legs up, 3 pushes up, and now maybe 2 or 3 pushes down. So you might have more buyers on the close of 28. And then you can see what happened on 28 or on 29. Almost outside up, strong bull bar. Bulls buying the deep pullback. You can see the breakout point. 14 was tested and we reversed up strongly. Bears probably exit above this bar. Even though this was strong enough for a second leg down, it's really minor. And then you can see what happened on 30. Everybody, the bears exited, they gave up. They realized we're low in a trading range. And 30, the bulls getting a breakout across the moving average again. Consecutive bull bars, it's strong. The problem is you're buying fairly high. Bulls are taking profits above bars. Market's channeling. It's almost really sideways too. But it is a little more bullish than bearish. Pause bar 31, probably sellers above, but the bulls will probably get a second leg after 29.30. Small bull bar, probably going a little higher, weak sell signal, and magnets above. What's the magnet? The high of the day, the current high of the day, and the bar 81 low, we had a gap, and that's a breakout point. And really all these bars are breakout points. 32 testing higher, but like I mentioned, we're in the channel phase, or even a trading range. So what do traders do? They buy low, sell high. Bulls got long down here, maybe above 29, maybe on the close of 28, maybe below here, maybe the breakout point, anywhere low. And then they get the rally to a new high, and look what happened. 32, sellers into the close. We tested the high and found sellers. 2 legs up, we're pulling back. 33, bear bar, but tight bull channel, probably minor, and testing the moving average. Disappointment. And inside bar 35, probably buyers below. 36, a second leg down, so rally 1, pull back 2, probably buyers below. 37, bull reversal bar, might be a bull flag, maybe buyers above. 37, but fairly tight down. It's a micro channel, might go a little lower first. Instead, we got the bull breakout 38. Same problem as with right here. If you're buying here, you're buying high in the range. And then disappointment 39. Probably go a little higher, but there's probably sellers above. And then 40 tried to break out and failed again, going more sideways. But the bears do not have enough selling pressure for any major reversal here. Bears are selling above bars for scalps, but that's about it. And it's a lot easier to make money as a bull than a bear right now. Outside down 41, but minor and still closing above the moving average. Probably buyers below. Inside bar 42 reduces the probability for breakouts, plus you're high in the channel, so there might be more sellers above and buyers below. And then 43, another reversal. The bears might argue it's 3 pushes up. You can argue a couple of different ways that we have a possible nested wedge, 1, 2, 3, and then in here, 1, pause, 2, pull back, 3. But a couple problems. 43 is a small bar, so small signal bars, usually the stops get run if you have a tight stop. Small risk, so low probability. It is possible we plunge below 43, and bears will take that trade, hoping for the plunge. But if it starts to hesitate or pull back, the bears might give it 20, 30 seconds, and if it hesitates, they'll just bail out of the trade. It's a minor reversal. It's not enough for a major reversal. You can argue there's decent selling pressure in here, but there is a bull trend line. And you can also argue, for the bear case, bull channel, bear flag, that's all true. But if you think about day structure, what happened down here? We had a wedge bottom, bears failed to break out, then we had a strong reversal. Tried to reverse down, bulls bought it strongly. Tried to reverse down, bulls bought it. And markets have inertia. We didn't even trigger below the sell signal. We got a bull breakout instead. But above 43, weak buy signal bar, high in the channel, probably sellers above taking profits. Follow through 45, but basically an inside bar. It's a high 1, but probably late, maybe 3 legs up. A couple different ways to look at it. Might be more sellers here, and the bulls will look to buy a pullback instead. 46 bear bar, probably a minor reversal, buyers below. 47, same thing. We went a little sideways, micro double top. Might test a little lower, maybe test the moving average, but it's a bull channel. Bulls are buying below bars, selling above bars. 48, a weak inside bar, probably sellers above and buyers below. Bears hoping double top, micro double top, and wedge top, but still not enough selling pressure. Bull bar 49, it's an inside bar, reduces the probability. If you're buying high in a channel, not ideal. And then sideways 50. Probably sellers above 50. It's a triangle, contracting, but we're always in long. Possible bull flag. Bear breakout attempt to 51, but failing below these bars, couldn't close below, and testing the moving average. Might be a failed breakout, and we reverse up. 50% of breakouts of triangles go the wrong way first. Inside bar 52, so bears 3 consecutive bars, that's good, but it might be leg 1, pull back leg 2, and leg 1, pull back leg 2, pull back to the moving average. And that's why traders bought below 52. Bull bar 53, high 2, bull bar, decent signal bar, and high 2 in a bull trend at the moving average. Bears probably exit above, look to sell higher, bulls might buy. Instead, we didn't trigger. The bears got one more push, but it's fairly climactic, and now it's 1, 2, 3 pushes down. Traders probably not buying above 54. The bulls want a little more sideways to up, but I think the downside is still limited. 55 tested lower. You can see where we're testing. We had a stop order above 37, and look where we're testing. We're coming close to that breakout point. But if you're a bear, how do you feel about this? 1, 2, 3. It's a parabolic wedge, and it's fairly weak. You don't have great selling pressure. You have lots of overlap and weak bars. Probably downside is limited. This might just be a bull flag. Outside down 56. Low 1, but bad context, probably buyers below. 57 inside bar reduces the probability and probably buyers below. And then finally outside up 58. Strong enough bull bar, probably going higher and might get continuation. testing this breakout point, the 37 high, or maybe the 36 close, somewhere in this area, and then be reversed up strongly, several legs down. Bears probably exit above 58. Did we ever go always in short? I don't think so, but if bears were short, they'll get out above 58. Continuation, breakout 59, probably going higher. A little bit of a disappointment, bar 60, but it's minor, probably buyers below. 61, high 1, in the middle of a tight trading range. We could simply pull back and then go higher, or we can go higher here, but I do think we'll test the highs again. 62 going a little lower, but weak. It's a stronger breakout here, then probably a bull flag, and then a second leg. 63, same thing as over here. So you got a bull breakout, but it's a trading range. Deep pullback. Traders buy the deep pullback. Now looking for a second leg. 64 going a little higher, but it's fairly weak. The market's really sideways. You can call it a triangle. Market might be getting squeezed, but the bears still haven't done enough. There's not great selling pressure in here. This was fairly good, but from there, not much. So more sideways to up, likely. 65 bull breakout. Testing magnets. You had bears sold here. You had bulls buying here. They got trapped, so they might be exiting their longs on this retest, but strong enough up. Another problem with it, leg 1, pullback, leg 2, possible second leg trap, high in a trading range, but strong enough, we'll probably go to the new high. Instead, second leg trap, they sold the close. 66 pulled back, buyers below. This is minor, still probably going higher. And then immediately reversed up on 67, probably going a little higher, but it's a high 1 at the top of a trading range. Sellers above, but they may not come in until the new high. Inside bar, so II pattern, it's breakout mode, and in a tight trading range. Low probability breakout in both directions, buyers below, sellers above. 69 breakout attempt, but stalling at the moving average. Most of the bars today, well, I shouldn't say that. The bears did have the control below here, but then we broke out, and then most of the bars here above, bears got below briefly, came right back, briefly below, came right back. They're trying to get below here again. The overall point with the moving average today, it's basically flat, and that's an indication of a trading range. Now, if you look at it, it's also slightly up. It's a bull channel. And in general, you're looking for bear breakouts of bull channels, and they happen 75% of the time. Only 25% of the time, you get a bull breakout of a bull channel. Here's the bull channel. And I'm saying that, but the problem with the bear breakout today is the selling pressure. You can also argue the context is bad. Bears failed early in the day, and they're not getting a great setup for a major reversal. The market could stay in this channel for a long time. So bear breakout attempt of the II, but 50% chance it fails. Bear breakout, we failed and we're reversing up. Bears might exit above 70, probably going higher. 71, bull breakout, but lots of overlap in a small bar. But really nothing for the bears to sell. Maybe the bears sell above this tight trading range, but they might wait to sell above here. 72, high 1, bad context, but bad for selling as well. Might be sellers above for a scalp. 73, same, it's a high 1, but bad context, bull channel, but we are fairly high in the range. There might be sellers above scaling in higher, but also buyers below. And then we reversed down. We broke out above 73 on 74, reversed down immediately. But 74 is a weak sell setup. Any bad stop order is a good limit order, probably buyers below. 75, crossing the moving average. A little bit of a surprise, but look where we're testing, the bottom of a tight trading range. Might go a little lower, but it could be 1, 2, 3 legs down, and then a sell climax testing support. And then disappointment for the bears, 76, it's a bull bar. It's also a pullback, so bear breakout, pullback, maybe a second leg, and then a reversal. And 75, you can say, strong enough breakout, second leg, pulled back on 76, and then down on 76, down on 77. There's your second leg, and a micro double bottom, down, and up. Might be buyers above 77, and then a little bit of a surprise there. And then you can see testing close to the channel line, testing above the high of the day. We're closing the gap below bar 81 yesterday. So late in the day, probably not worth doing much of anything. Might be 3 legs, 1, 2, 3. Better to fade third legs, especially in this context, but big enough bar, hard to do. Disappointment, 79, probably sellers above, might get a small second leg, and then instead just went sideways to down. For always in today, probably always in long bar 2, but bad context, so when you get bar 3, you have to reassess and think this is probably a trading range. Can't be trading always in long. Can't be trading always in general. And then, is it always in short bar 7, bar 8? It might be, but at that point I'm thinking I have a trading range mentality, and with yesterday's context, usually better to look to buy low and sell high, and by bar 8, we're fairly low in the range. And that's why we reversed up strongly on 10 and 11. I thought probably always in long it's really interesting concept. I thought above bar 15. When you get bar 15, you have to exit shorts, and if that's the case, it's probably always in long. Now it might be minor and temporary because then you get bar 17 and then 18 disappointment high in the range. Might just go more sideways. But if it ever was always in long, when did it become always in short again? You can argue 26 through 28, but I think the bears needed one more bar because we were testing a breakout point, the bar 14 high. The bears didn't get it. And from there, we really didn't go always in short for the rest of the day. For stop orders, maybe you aggressively can buy above bar 2, consecutive bull bars, but again, bad context. You get out on bar 4, the retest. You can sell below bar 6. I know it's not a strong signal bar, but the context was good, expecting a test down. I thought buying above 15 was a good stop order trade, wedge double bottom, and then maybe 3 legs up, 17, 21, 26. Maybe you sell below, expecting a trading range, deep pullback, maybe a test of the lows. Then you get 30, then you get 29, exit above, maybe you buy above, expanding triangle, breakout test. Maybe all leg 1, pull back, second leg. And then here's a high 2, so a strong enough leg up here, 1 pullback 2, buy above 37. And then up here, I don't know. 50 is not a great signal bar, but it was a triangle, high in a channel. You could sell below it, but the downside's probably limited and hard to hold through this. 58 I thought was reasonable, probably a nested wedge and a double bottom. You can buy above 58. And then 63, similar trade, but big bar, so big risk, really not ideal. And then probably limit orders for the rest of the day. I did mention, actually, one more trade above 77. I thought you could buy above bar 77. And then for limit orders, on bar 5, it's a bad high 1, sellers above bar 5. And then sellers above bar 8, they didn't come in until a few bars later. Buyers below bar 9, 3 legs down, yesterday's low, support. Buyers below 18, high 1 after a strong rally for a scalp. 3 legs up, you might have sellers above 23 here, or the high of the day. They came in on 26. And then buyers at the breakout point of 14, they came in over here. Hard to buy against 3 strong bear bars. And then micro channel, probably buyers below, but they may not come in until here. The pause bar, bears got trapped, testing that breakout point. And then all the way up, buyers below, sellers above. It's a bull channel. Even in here, bulls can buy, scaling lower. They're probably going to make money. Bad high 2, maybe a high 1, sellers above for a scalp, above 55. Bad low 1 and inside bar, fairly low in the channel, below 57, buyers below. 2 legs up, so you might have sellers. It's a leg 2 trap, but hard to do in real time. And then in here, buyers below, sellers above, but would not sell above 77. It was reasonable for a higher test. And then it's the end of the week, so what about next week? I don't know. The bulls are hoping we get a bull breakout and continue higher. This is a high one and a new breakout and leads to more buying. But the bears still arguing we have a bull breakout of a channel, and maybe this was a trading range. We're probably going to come back down into the range. So maybe sellers above, but we will see. And with that, please feel free, I just want to mention again, please feel free to leave questions in the comments and include timestamps for any questions specific to this video. And with that, I hope everyone has a good rest of their night, and thank you for watching.